What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And today we had an absolute bloodbath all across the board, guys, courtesy of Facebook, of course. Russell 2000 went down today 1.90%. The Nasdaq went down 3.74%. Dow Jones went down 1.45%. And the S&P 500 went down 2.44%. This situation might change tomorrow. We are going to obviously go over the indices, S&P 500 and Nasdaq 100. You guys know that I usually don't like to take a look at the earnings reports before filming my videos. But today I had to do it, guys, because what is going to happen in the markets was depending on a 99% on the earnings report of Amazon. So I obviously took a look at the earnings report of Amazon, and Amazon is flying after hours. And the futures of the S&P 500 and the Nasdaq 100 are going up as of now. But well, if we talk about today's trading session itself, we had an absolute bloodbath all across the board. If we take a look at the advances and declines distribution, we can confirm that we had a horrible day, guys, led by Facebook, basically, and Amazon. Amazon also had a very tough day today, going down something like 7%. During regular trading hours, right? So today we had 1,786 stocks going up and 5,666 stocks going down. So what can happen tomorrow? Remember that tomorrow is going to be a very important day for the markets. We are going to have the jobs report of January. That is going to be a market mover, no doubt about it. So the markets are expecting 150,000 new jobs to have been created during the month of January. I believe that we are going to see a big miss when it comes to the jobs report of January, because yesterday we had the ADP report. The ADP report basically tracks the private employment in the US, and the markets were waiting, or the estimate was the private industry to have created 200,000 new jobs during the month of January, and on the other hand, the private industry lost 3,000 jobs in January. So we can expect tomorrow's jobs report to be way weaker than expected, which is good news from an inflation standpoint. However, the most important metric that the markets are going to be paying attention to is going to be wage inflation. If wage inflation comes out as expected, that is going to be perceived as good news in inflation terms. And if we happen to see, even if we happen to have to get a way weaker than expected jobs report, but if we see a higher wage inflation, then that is going to end up being bad news for the market. So if wage inflation comes in line, and taking into account that Amazon reported good earnings, not good earnings necessarily, but they really crushed EPS. Let's just put it that way. And the stock of this mega company is up a lot after hours. So taking into account that Amazon is going up after earnings, and if wage inflation doesn't happen to go up a lot, tomorrow, when we get the jobs report of January, then we probably will get the perfect recipe to have a green day in the markets. I also wanted to let you know that today we had the jobless claims coming out. That's a report that that the markets couldn't care less about, but whatever. That happened today, so I wanted to tell you about it. So jobless claims came out at 238,000 new claims. 23,000 fewer claims relative to the week prior. So that was a report that came out better than expected. And now I am going to show you guys these sectors, because the sectors usually tell us what happened during any trading session. So check this out, guys. Today, 10 out of the 11 sectors of the markets went down, except for consumer staples, which went up today 0.03%. And if we take a look at the three best performing sectors today, then we find utilities, which went down 0.45%, and healthcare, which went down 0.43%. So what's the message when we take a look at the sectors over here? Today the markets were feeling fear. They were feeling a lot of uncertainty, probably because of the big question mark about the earnings report of Amazon, and they went after defensive stocks. Obviously, something that is worth pointing out about today's trading session is that the fact that the financial sector went down today 1.10%, whereas the 10-year Treasury yield ended up going up 3.30%. And these two usually act in a correlated way. The VIX went up today, guys, something like, I think that 13%. Let me pull it up over here. I don't remember. The VIX went up today 11%, a lot. Obviously, so the VIX went up a lot, and the big money of Wall Street went after defensive stocks. That makes sense for the most part. And obviously, guys, the very worst performing sector today was communication services, basically because of Facebook. This sector went down today almost 7%. I don't recall, guys, any other trading session in which, other than the trading sessions of the crash of the COVID-19, of those very horrible days back from March of 2020, I don't recall, guys, having seen communication services, this sector going up almost 7%. An ugly day, very ugly day all across the board. That tomorrow might change. Let's see what happens with the wage inflation numbers when we find out about the jobs report of January. And before going over the indices, guys, I want to show you some trades that I took in today's trading session. Starting out with Qualcomm, guys. I took a very nice and quick day trade with the stock of this semiconductor company. So this was a 15-minute trade or something like that, guys. This afternoon at around 1 p.m. or so, Eastern Standard Time, I purchased 75 shares of Qualcomm at $178.70, and I paid $13,402, and I ended up closing this trade, as I just said, in a matter of, 15 or 20 minutes. This has been one of the quickest trades that I have taken in quite a long time. So I ended up selling out of my shares of $181.39, and I was paid $13,604. I ended up making over here $200, and I also was able to take a day trade on Meta platforms on Facebook, guys. So let me show you what I did over here. So this was a day trade that I took with a call option. So let me show you. This morning I purchased the $230 call that expires on June 17, and I paid $3,200, and I ended up closing this trade, selling out of this call option, and I was paid $3,490. I made over here $290, and I made $200 with the trades of Qualcomm that I just showed you. So today, and despite the fact that we had a horrible day all across the board, I was able to make $490. So I had a very solid day when it comes to trading. And now let's go ahead and take a look at the S&P 500. And this chart doesn't belong to the cash index of the S&P 500, as I usually do it, because we need to take a look, guys, at the after hours action that we are seeing as of now, guys, because take a look. The futures of the S&P 500 closed today's trading session at 4,462 points. And after hours, we are up a lot, guys. I think that more than 1%. Thanks to Amazon. Yes, we are up 1.29%. And the futures are trading as of now at 4,517 points. So let me go ahead and take a look at the S&P 500 itself, the cash index, SPX. And let's see what could be happening over here tomorrow, guys. I am going to pull up the 1 hour chart and take a look at this red line that I drew over here, guys. 4,600. This is going to be a critical area, no doubt about it. At 4,600, we failed in yesterday's trading session, and we also failed on 3 occasions back in mid-January. And this line that you guys can see over here is the 100-day moving average, which as of now is sitting at 4,568 points. So we can easily make the case, guys, that the most important task for the bulls tomorrow is going to be taking on this 100-day moving average, as I just said, at 45.68, and filling the next gap up to 4,600. If the bulls are able to take 4,600, and now I am going to pull up here the 4-hour chart, then they are going to be getting closer to this 180 SMA on the 4-hour chart at 4,636 points, or 46.36. And once the bulls are able to burst above this moving average, this 180 SMA on the 4-hour chart, they are going to be, at least from my perspective, guys, and from a technical standpoint, from what I said, they are going to be regaining control of the S&P 500. I am not saying that this is going to happen tomorrow right away, but above 4640, according to my opinion, the bulls are going to be in control of the S&P 500. If tomorrow we happen to see another drop, I don't know, maybe the jobs report reflects a very elevated wage inflation tomorrow, and if we happen to see a pullback in the S&P 500, then I think that the most important area of support is going to be this 200-day moving average at 4430, which I think is going to be a very tough spot for the bears of the S&P 500. And now let's go ahead and take a look at the Nasdaq 100, which went down today 4.22%, and it closed today's trading session at 14,500 points. And I think, guys, that when it comes to the Nasdaq 100, this index is trading as of now after hours. Let me see. No, this is not the Nasdaq 100. It is trading at 14,800 points, I'm thinking. And I need to take a look at the futures, guys, before breaking down this index, because everything changed since Amazon reported earnings. So after hours, we are slightly below 14,800 points. And so now let me pull up here the NDX. Okay. So what could happen tomorrow if the Nasdaq 100 happens to open tomorrow's trading session at 14,800 points? So the most important task, if that were the case tomorrow, is going to be, for the bulls, is going to be taking on this 200-day moving average at 15,000 points. If the bulls can take on this moving average, this 200-day moving average at 15,000 points, as I just said, the next important gap that they are going to have to fill is going to be up to 15,200 points, a previous area of support back from early January, and we are also talking about a former area of resistance back from early August. On the flip side, a worse than expected jobs report, inflation-wise, that situation could lead to another drop in the NDX. In which case, I am going to be keeping a close watch on 14,670 points as the main area of support for the bulls. When I say 14,670 points, we are talking about a former area of support back from mid-October. So let's see what happens tomorrow. Amazon did a big favor to the bulls. Let's just put it that way. And watch out, guys. I don't know. Let's see what happens tomorrow with the jobs report, inflation-wise. But definitely the earnings report that I am going to do breakdown over here of Amazon was very good news for the bulls, no doubt about it. Amazon goes down today 7.81%. Jesus Christ. This is a company that has a market cap that I believe is above $2 trillion. Unbelievable, guys. And the stock of this company closes today's trading session at $2,776. So let me pull up here the live news tab. Let me see if I have the information handy, guys, because I didn't have the competitive earlier on today. Okay, so Q1, this is the guidance. Okay, that's fine, but give me, okay, sales came in at $137.40 billion, missing the estimate of $137.60 billion. So they missed on sales, just by a little, nothing to be concerned about. And let me see EPS, guys, because before starting to film this video, I was taking a look at the EPS and I couldn't believe it because they really crushed EPS. So let me see if I have here the competitive when it comes to EPS. Please, Thinkorswim, help me out here with the competitive. No, I don't see it either as of now. Let's see. Okay, when it comes to guidance. So Q1 sales, Amazon expects Q1 sales somewhere between $112 billion up to $117 billion versus $120 billion estimate. So they are missing when it comes to guidance, guys. This is something that really caught my eye by a good chunk, I would say, right? We're talking about $3 billion, okay? Best case scenario. And they are increasing the monthly fee for Prime membership from $12.99 up to $15. So that's also good news, obviously, right? And EPS came in at $27.75, up from $14.09 year over year. But I don't have the competitive when it comes to EPS, and I couldn't see this information either anywhere else. So the market seemed to be very happy with this earnings report, guys, even though the guidance is weak and even though they missed on revenue. But they are increasing the fee when it comes to the monthly fee when it comes to the Prime membership, right? So I don't know, guys. I didn't necessarily like this earnings report, but Amazon is up a lot after hours. So the stock of this company is not, as of now, overbought. You guys can see over here the RSI at 68 points, even though Amazon has gone up after hours, guys. 20%. This is unbelievable. I wanna double check on this. So I pull up here the 1 day, 1 minute. So yeah, Amazon closed today's trading session at $2,779. And it is trading as of now after hours at $3,285. Amazon is up after hours 17%. We're living extraordinary moments, guys. No doubt about it. So even though Amazon is up 17% after hours, the stock of this company isn't overbought yet, guys. So I'm thinking that if the bulls of Amazon tomorrow, and I am going to draw a line over here, if the bulls can take on $3,300, they are going to have a fair chance of filling the next gap up to $3,400. $3,400 happens to be a former area of resistance back from early January. So if Amazon was able to make this push to the upside from $3,300 up to $3,400, we are looking at a 3% profit trade. Nothing to sneeze at. Am I going to try to take this trade? I don't think so, guys. I don't really like the earnings report, and the markets liked it, which is great. This could give some oxygen to the bulls, but I don't know. Maybe we can see a retracement tomorrow down to $3,200, which happens to be a former area of support back from early October and also back from mid-August of last year. So that would be a spot in which I would be more comfortable starting a position on Amazon. So apparently, guys, I don't want to count my chickens before they hatch, but apparently Amazon saved the day, not to say the month. So we'll see what happens tomorrow with Amazon. A snapshot, guys. This thing is boosting after hours. So Snapchat went down today 23.60% during regular trading hours and closed today's trading session at $24.20. I think, and I have been telling you this, guys, here on the channel, that this stock was priced for the worst case scenario. And take a look at how Snap is up after hours. Let me see. Snap is up after hours 54%. Jesus Christ. Unbelievable. Snap is trading after hours at $37. Wow. Price to the worst case scenario, guys. No doubt about it. So, in the case of a Snapchat, what happened here? So EPS came in at 22 cents, beating the estimate of 10 cents, and sales came in at $1.30 billion, beating the estimate of $1.20 billion. And I saw something here about guidance, guys, because they see, okay, Snapchat had its first quarter of positive net income as public company and first full year of positive operating cash flow and free cash flow. That's very, but very important. That implies that this company is no longer in a speculative phase, guys. That is very, but very important. And when it comes to monthly active users, which is a very important metric when it comes to these kind of companies, okay, Q4 daily active users came in at 319 million, up 20% year over year, versus the estimate of 317 million daily active users. A beat across the board, no doubt about it. Let me see if I see something here. Let's see, guidance related. No, I don't see anything, guys. So that's fine. They beat they beat on daily active users. They beat on sales, beat on EPS. They also are stating that they are a free cash flow company. So very solid earnings report for Snapchat. And this is, get this, guys. So the stock of this company has gone up after hours 50%. Right? Perfect. The RSI of Snapchat is at 64 points. Absolutely unbelievable. So Snapchat is not even overbought as of now. So I'm thinking that if Snap can take on $38 tomorrow on good volume and momentum, which could be the case, we are talking about a former area of support back from January 10th, the stock of this company might be able to fill the next gap. I am going to draw a line over here, up to $44. $44 happens to be a former area of resistance back from early January. So if Snapchat was able to make this push to the upside from $39-ish up to $44, we are talking about a 12% profit. So unbelievable earnings in the case of Snapchat. And yes, guys, this stock was priced to the very worst case scenario. And that's it, guys. Very, but very solid earnings report for Snapchat. And now let's go ahead and take a look at the other stock was Pinterest, which also killed it, guys. Another stock that was priced to the very worst case scenario. So Pinterest goes down today during regular trading hours 10.32%, and it closed today's trading session at $24.51. And let me see how high has Pinterest gone after hours. So Pinterest is up 30% after hours. How about that, huh? Okay, what happens over here when it comes to earnings? Obviously, they killed it as well. So let me see, what is the okay, EPS came in at 49 cents, beating the estimate of 45 cents, and sales came in at $847 million, beating the estimate of $827 million. And when it comes to active users, let's see if I can see that information over here. Okay, Q4 global monthly active users down 6% year over year to 431 million, versus the estimate of 447 million. So they missed on monthly active users, right? Which isn't positive necessarily. And this was an acceptable report, even though they failed when it comes to monthly active users. So what could happen with Pinterest in tomorrow's trading session? So the stock of this company went up after hours 30%, and the RSI is at 59 points. So Pinterest is nowhere near of being overbooked. So let me draw a line over here over this 180 SMA on the 4-hour chart. So we can make the case that if Pinterest tomorrow can, or if the bulls of Pinterest can take on tomorrow this 180 SMA on the 4-hour chart, they might be able to fill the next gap up to $38. This would be a very aggressive push to the upside. $38 happens to be a former area of resistance back from late December. So if Pins was able to make this push, or were able, that's the way you say it, were able to make this push to the upside from $34-ish up to $38, we are looking at a 12% profit. So watch out tomorrow, guys. With Pinterest and Snapchat, because both stocks made unbelievable pushes to the upside, and they are not even overbooked, because obviously they got absolutely killed recently. And the last stock of this video is going to be Activision Blizzard. And what is going on with Activision Blizzard? They were supposed to report earnings today, right? Did they report earnings? I don't know. I'm not even sure, right? Yeah, they did, but the stock isn't moving after hours. So let's see if I have the information handy. Let me see. Q4 EPS. Okay, EPS came in at $1.25, and sales came in at $2.49 billion. And do I have any? I don't have the competitive when it comes to EPS and sales. Okay, Activision Blizzard says deal with Microsoft expected to close in Microsoft's full year ending June 30th, 2023. Wow, so this deal is going to be closed. Yeah, that's like a year and a half out, guys. Yeah, that's a lot of time, huh? A lot of time. I was thinking that this deal was going to close way sooner than this, huh? Okay, let's see. Q4 in-game net bookings were $1.24 billion as compared with $1.32 billion for Q4 of 2020. I don't have any competitive over here, guys. Nothing. Zero. I cannot tell you what the estimate is when it comes to EPS and sales. So the information that I have over here is incomplete, unfortunately. And I didn't know that the deal with Microsoft was expected to be closed in 2023, June of 2023. Well, that's all. I mean, that's a lot of time over there, guys. So the stock of this company isn't doing anything after hours. From a technical standpoint, guys, we can say that ATVI is trading below the 200-day moving average at $80. We can make the case that if the bulls can take on this 200-day moving average, I mean, the stock of this company doesn't look bad from a technical standpoint, guys. I am going to draw over here an ascending channel. Take a look. So the stock of this company is uptrending clearly, right? This is a technical setup that looks pretty decent. And we can make the case that if the bulls can take on this 200-day moving average at $80, they are going to be able to fill the next gap up to $84. $84 happens to be a former area of resistance back from August of last year. So if ATVI were able to make this push to the upside from $80-ish up to $84, we are looking at a 5% profit trade. So the earnings report of Activision Blizzard doesn't say much. And I do like the technical setup that I am seeing over here, and I am really surprised that the deal is going to be closed in June of next year. So wow, that's pretty far out, guys. Definitely, right? And with Activision Blizzard, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do things differently because we talk about the markets in 2 different languages, English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs, just like you guys and myself. My name is Alvaro, and I will see you guys on Monday. Once again, 3 or 4 hours after the market closes. Peace out, and you guys have a very nice weekend. Bye.